Well, with me now to take a closer look at China's CPI is Mark Williams. Mark has advised the UK Treasury on China, and he's now a senior China economist for Capital Economics. So, Mark, good morning to you. Thanks for coming in.
You're welcome.
So, break down these CPI numbers for us, these inflation figures. Tell us what conclusions we can draw from them as well.
Well, we've seen a pretty big jump in the headline CPI rate for February, but it's difficult to read too much into those numbers because, as you know, around Chinese New Year, there's a lot of volatility in Chinese prices, particularly of foodstuffs. So it makes more sense, perhaps, to look at inflation over January and February combined.
Which makes it a bit lower.
Which makes it a bit lower, smooths out some of that volatility. Looked at that way, inflation over the first 2 months was at 2.1%, which compares with 1.9% in December. So it's a tick up from where we were, but not a particularly big jump.
Not as hot as we might have thought. So what does that mean then in terms of when you're expecting an interest rate hike from the Chinese government?
Well, I think that the Chinese government will be pretty pleased with the latest price data. There were worries at the end of last year that prices seem to be rising too fast. The latest data suggests that those pressures haven't really pushed through to the broader economy, and over the last week we've had a succession of senior figures queuing up in Beijing to reassure us that policy is going to stay pretty much the same, and also that they remain pretty cautious about the sustainability of the recovery, particularly, of course, looking to the recoveries overseas, which has been helping Chinese exports recently.
So we're talking about the second half of this year for a rate rise?
Well, that certainly suggests that we're not going to see anything imminently. You know, some people have been suggesting that we could be seeing rate hikes or even a step appreciation of the currency in the next few weeks. I think it's more likely to be, say, May before we see the first interest rate hike, and then moves on the currency will probably come sometime after that.
Now, those moves on the currency, are they going to be small?
Small is the important word, I think.
Yeah.
As I said, the government remains pretty worried about the long-term outlook. There's a balance to be struck here between the long-run need to have a stronger currency, which is important for rebalancing the Chinese economy, and the short-run concerns about how exporters are coping.
Talking about rebalancing the economy, the National People's Congress gathering right now, they're coming up with a new 5-year plan for the country. What are they likely to be discussing? What are the themes of that 5-year plan likely to be?
Well, the rebalancing has been a big theme in all Chinese policy documents going back to at least 2004. So undoubtedly rebalancing will be a big part of it.
This is becoming less dependent on exports,
boosting
more
consumption
dependent on
at home, exactly, basing less of the economy on export demand. Undoubtedly there'll be a lot of talk about boosting urbanization and such things, which should boost consumption in the long run. But these are really aspirational targets for the Chinese government, and the fact that they appear, as headlines in the 5-year plan does not necessarily mean that they're going to come to fruition. We've been here before.
Urbanization, that makes me think of property prices in China, where, of course, you have a bubble going on.
Well, a bubble.
Would you call it a bubble?
In some places, but certainly not across the country as a whole. The latest property price data came out yesterday, showing that prices are about 10% higher than they were a year ago nationwide.
Right.
Now, of course, the economy in nominal renminbi terms is growing by about that at the moment, about that pace, perhaps even a little stronger. So, which implies that that prices may be rising, but incomes are rising too. So, property is not at the national level becoming too expensive. There are a few pockets. I think Beijing, Shanghai, and maybe Shenzhen down in the south, price rises have been too fast for comfort. But at the national level, perhaps not.
Maybe you can shed a little light on what local governments are doing across China. They're borrowing a lot of money. They're building infrastructure very quickly. There's talk about, whole cities in China that are shiny and new, but the buildings are empty and there's nobody around. So is there a concern here about overcapacity, or is that just not possible in a place like China?
Oh, there's certainly concerns about overcapacity, and this has been a big theme. We've seen it recently in real estate, but over the last few years in things like the steel industry, there's been massive overcapacity. If you think back a year when the Chinese started to think about how to stimulate growth in their economy, they've been channeling a lot of loans through local governments and through local government-owned companies into infrastructure and so on. And a lot of this went out, I think, without any kind of broad plan for where China needed to go. So it's inevitable that we've ended up perhaps with more high, buildings or so on, more airports than we need.
They'll need it someday, though, huh?
Exactly, exactly. China's a fast-growing economy.
Thanks very much. Mark Williams there, senior China economist at Capital Economics. Thanks for joining us.